All right. Good morning, good afternoon, depending on where you're tuning in from, and welcome to this week's mobile coaching stream. My name is Patrick France, Senior Instructor here at VectorVest, and I will be your host for today's session. Hopefully everybody is doing well. Hey there, Jay. Hey there, Martin. Good morning. Hopefully everybody is having a good morning so far. Once again, welcome everybody. This is our weekly mobile coaching stream we do every Thursday at around 11 a.m. Eastern, where we talk about the most comprehensive trading app out there, and that's right, the VectorVest Stock Advisory app. So if you guys are ready to learn, make sure, as always, smash that like button. If you're on our Facebook page, make sure to share this out with all your friends and family as well. And without further ado, let's go ahead and jump right into it here this morning. So as always, we'll start off taking a look at what's going on in the market. Then we'll dive into our topic of discussion, and then we'll finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. So starting off here at the homepage right now, the Dow is basically flat. NASDAQ is up just shy of 0.9%. S&P 500 is up about 0.4%. VectorVest Composite up about 0.2%. Therefore, that market action has our needle 3 ticks into the green. So today's market is bullish, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. As always, if you ever want a detailed description of what the chart is telling us, make sure to check out the daily color guard report found right here. It's a quick, short, 5 to 10 minute long video every Monday through Friday where we cover what's going on in the market today, what to expect for tomorrow, and what news you need to be aware of for the next or going forward. So scrolling down just a little bit more, getting into the color guard itself, it's where that gauge gets its colors from, and it really tracks the key components of our market timing system here. So the first one we're going to be looking at here today is the price column, which stands for the price of the VectorVest Composite. Now, the VectorVest Composite is an arithmetic indexed average of about 9,200 stocks in the US market, and this gives you a better representation on what's going on in the overall market, because it's not just looking at small subsets of the market such as the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but once again looking at 9,200 stocks all into one. As we can see, it is currently green since we are higher day over day and week over week. The second indicator is the RT or relative timing, and the relative timing looks at the short-term price trend on the overall market, and it's cast on a scale of 0 to 2 to make it easy for you guys out there. So if it's above 1, as it is now at 1.06, it tells us the short-term trend of the market is up and improving week over week. Not quite day over day yet, but at least improving week over week. Then we look at the buy to sell ratio, which analyzes the overall health of the market. It's looking at the number of buy rated stocks in a database and comparing it to the number of sell rated stocks in a database. Mic is not working fine. Let me make sure all plugged in. Anybody else having any audio issues? I show everything's going fine on my end. So if you guys are having audio issues, I suggest refreshing. But the buy to sell ratio looks at the overall health of the market. And as we can see right now, the buy to sell ratio is reading at 2.3, indicating more than twice as many stocks advancing than or moving higher or have that buy rating than have that sell rating. So therefore, shows us overall market strength in the market. And since it's above that level of 1, and since we have that green light, that tells us we're moving higher day over day and week over week. Now, the trends of these 3 indicators are comprised to come up with our MTI or our market timing indicator. It's cast on a scale of 0 to 2, and it's looking at the underlying trend of the market. So currently, since it's above that level of 1, that tells us the underlying trend of the market is up. Yeah, VJ, I like the way you think. Everybody should listen to VJ more often. But as we talked about last week, you know, the old famous saying, keep your eye on the MTI. Well, we pulled back and now we're right back into that top heavy level, the level that shows the market's starting to look for a top. So at the same guidance we gave last week, we should still advocate caution right now. Be very careful if you're going to be taking some long positions, knowing that we're closer to a top than a bottom here. After the MTI, we then get the trend column, which shows 2 parts of the trend each and every day. Now, the first part is what we like to call the primary wave, which shows the short-term or simply weekly trend of the market. As we can see, it is up since the price of the VectorVest Composite is higher than what it was compared to 5 trading days earlier. Second part, looking at the underlying trend or the MTI. So since the MTI is above 1, the underlying trend of the market is also up. And last but not least, we finish off with the calls column here in the color guard. And the calls column stands for our confirmed calls, which is our most conservative timing system. It's our last signal we'll ever give to get out of the market and our last signal we'll give to get into the market. Therefore, you never want to ignore a confirmed call change. And right now, we still remain in that confirmed up situation as of today. Also, if you're over on the Facebook page, make sure to hit that like button. Let me say hi, good morning. Let me know where you guys are tuning in from here. I see a lot of people on there, but not a whole lot of people talking. That's fine. If you were wanting to lurk there, A-okay. But if you're chilling or hanging out in the Facebook side, make sure to say hi. All right. So last but not least on the homepage, what we want to do is take a look at the advanced declines, which shows the number of stocks moving higher for the session and compares it to the number of stocks moving lower for the session. And this is a great thing to look at on a daily basis if you're getting ready to get into the market or getting ready to open up a position. And what you want to look for is a 2-to-1 bias in any given direction. So since the markets are moving higher for the time being, if you want confirmation to make sure that you see strength and you have probability in your favor that if you get into that position, it's going to be, most likely moving up, giving you that little bit of cushion baked in right out of the gate. We want to see a 2-to-1 bias, giving us that high probability of success upon entering the trade. Therefore, like always, increasing your probability gives you a stronger rate of success, and also having that cushion baked in right out of the gate helps reduce some of that emotional aspect out of your investing, so that way you can stick to a more systematic plan. Hey, good morning, Penny. Welcome. Glad to see you here this morning. All right, so without further ado, let's go ahead and get right into today's topic of showing you how easy it is to weed your portfolio. This is going to be useful for somebody who is brand new to the VectorVest Stock Advisory app, or if you've been here for a while and let's say, you feel like you've kind of lost your way a little bit. Well, getting back to the basics and weeding out the bad stocks so that way you can free up cash to reinvest into stocks that'll make you money is a great place to get started, to get reacclimated with the basics and get back to the fundamentals here. So what I want everybody to do is type in some stocks into the chat right now. And what we're going to do is we're going to build a watch list of your guys' stocks. They don't have to be the best ones. They could be bad ones. Just throw out some symbols right now, and we'll use those to populate a list as our example here for the day. So what I'm going to do is I'm going to get rid of this one, create a new watch list, and start typing them in. So we got shop coming in, AMLI, SVRA, NXAV, MVAX, I'm assuming that's supposed to be. Novavax, there we go. Let's see, QURE, PEP, well, weeding, Dom, it's an adverb, not a noun for a certain plant there. I hope the Facebook algorithms and YouTube algorithms can at least know the difference between that there. Let's do a couple more here. DIS, Tilray, might as well. TLRY. So we've got 10 of them. We'll use 10 for right now. And we'll title it Facebook Live 126. There we go. All right. We've got those in here. So let's say today, right now, we're brand new to the Stock Advisory app and we put in our stocks. These are our 10 stocks that we're holding. Let's see how easy it is to weed out the bad stocks so that way we can free up some cash to reinvest into stocks that will perform a lot better and get our portfolio back on the right track. So, as always, whenever you build a watch list, it'll automatically sort these stocks to bring the best performers based off of VST or value, safety, and timing to the top of the list, and the worst performers to the bottom. So SVRA is our top performer currently. We take a look at the analysis. It is a speculative stock, but look at that RT. The RT at 1.96 on a scaling of 0 to 2 tells us it's in a really strong short-term uptrend, so therefore the stock is favorable right now. But if we go down to the bottom, NVAX, looking at the timing, 0.19 tells us this stock is in a really strong decline currently, the opposite of what we saw with the first one, so therefore the stock is not favorable right now. But instead of having to scroll through and go down, especially if you have more than just 10 and you're just, having to go through each one individually, the fastest thing you could possibly do is use that rank by at the very top. So if you go to rank by, once you own a stock, as we've talked about many times in the past, the most important indicator that you need to be focused on is RT. Because if you recall, relative timing is that short-term price trend indicator. And anything above 1 tells us it's an uptrend, below 1 tells us it's in a downtrend. Another way of looking at that is anything in an uptrend means it's making us money. Anything in a downtrend means it's losing us money. And I think we can all agree it does not make sense to hold on to stocks that are losing us money. Hey there, Chris. Hopefully you're doing well. So once we have it resorted by RT, then we'll put it in ascending order by tapping on that little 3-bar line with the down arrow, and that'll automatically bring the worst performers in our portfolio right to the top for us. And this is where you need to start off with to start reevaluating some of these plays and see if it's worth holding on to or keeping them in our portfolio. Sometimes there will be opportunities, or sometimes there will be times where, it's a long-term play. You're really convinced that this stock has that potential, just not quite there yet. You're willing to sit through a big loss and not cut it. Occasionally that will happen, but for the most part, any one of these that has an RT below that level of 1, there's going to be a better time to buy it most likely in the future. So therefore, no need to sit through that pain of watching it continue to sell off. Rather, just cut it now, save some of that cash for later. That way you can reinvest it later on when the stocks start turning back around and probably get it at a discount than where you sold it from. So NVAX is our worst performer and the stock that's losing us the most money right now. So let's go ahead, take a look at the graph. And before we do that, just a quick analysis. The 4 indicators at the bottom are cast on that scaling of 0 to 2. All you have to remember is above 1 is good and below 1 is bad. As we can see, all of them are below that level of 1, telling us the stock has poor fundamentals, poor technicals, so therefore overall it's not favorable. Let's go take a look at the graph. I'll maximize it here. Looking at the chart of a 1-year look back, this stock was trading at around $90 a year ago. Now it's trading at around $11 currently. So you have lost almost 90% of your portfolio or this position's value by holding onto it for a year. Well, as you can see, a year ago it had a sell rating. It still has that sell rating. So therefore, most likely we would have been out of this a year ago. And as I mentioned earlier, you could always get back in if it starts going back or turning back around and probably get it for cheaper. Well, right now, you're definitely going to be getting it for cheaper. So even if you bought it, let's look at a 5-year. Even if you bought it for, let's say, 200 and sold it at 100, well, you still have half of that portfolio or half of that position value. So now, if it starts turning back around, you catch it at 15, you're getting a massive discount on that stock. So therefore, that's what you'd be waiting for, and you have a lot more cash to put into that position than if you just sat and held onto it for this whole time. So this is why, freeing up that cash to reinvest into stocks that'll make you money is a prudent methodology to follow here, and why we want to cover it here today. So looking at it, yeah, most likely we're going to cut this one out of our portfolio. Going to the next one, Tilray. Another one that, was trading 3 times as much earlier, about a year ago. So cut it, instead of sitting here holding it and keeping a cost average of $9 a share, let's say, you cut it early, Wait until you start seeing signs that it's actually turning back around, and then you pick it up at $3, $4 a share, saving yourself a lot of sleepless nights, saving yourself a lot of headaches and worry, and therefore being able to get back in when it starts to trend back up and put more cash into that position. Therefore, you can get a better return on your position instead of waiting until it gets back to 9 just to break even. So this one definitely going to be cutting as well. As you can see, lower highs, lower lows by the most basic definition, clearly in a downtrend right now. Getting out of that, going to the next one. QURE. Now this one has been rising over time, but has had some pretty steep drops every time it pulls back. If you notice here, RT pulled back here, went lower for a bit before RT finally started coming back. Well, then you got a new run there. RT finally started dropping lower again, got out instead of sitting in it while it's pulling back again. So this one, relatively flat throughout a lot of periods, but does have some big pops and drops. If you're timing it properly, yeah, you can make money off of it. But if you don't time it properly, you're probably going to lose money off the big drops that it has as well. Going to the next. CNC. Another stock had a great run for a while, but even the best stocks can have sell-offs. And right now, you've definitely seen that. So this is why you go through your watch list and you see whether or not these stocks are really worth holding on to. I think we can all agree NVAX and Tilray are clearly worse performers. So therefore, we would cut them, get them out of the portfolio. Once you sell those positions, just delete them out of here. And that way you now have cash to reinvest into stocks that'll make you money. Luckily, you got VectorVest on your side. And with our market timing combined with some of the stock selection, you can easily find some stocks to replace those worst performers with to get your portfolio back on the right track to making money. So one of the places to go once you've freed up that cash and we have the timing, let's say we're not right at a peak on the MTI. Let's say we were 4 months ago when the MTI was around that 0.6 range, and now we're getting ready for some opportunities to jump on board with to take advantage of. Well, go to the stock pick ideas. Under the stock pick ideas, you have easiest place, overall top rated stocks. As we talked about, VST is a extremely powerful indicator that looks at both a fundamental and a technical reading on a stock and summarizes it into one. Well, if you can put the power of RT, there we go. If you can put the power of VST on your side, you can find some of the best performers at any given time. Now, these stocks, some of these may have been in here for a while. Some of them may be just starting to get in here. But at the same time, like I said earlier, make sure you're always checking in with the market timing to make sure that it's a good time to be buying or not. We're going to assume, just for example purposes here today, that everything is gravy, the market's looking great, and today is a perfect day to be buying. So we come into the top VST stocks. First thing you want to do, analyze the stock. Once again, look at those 4 bottom indicators at the bottom. Cast on a scale of 0 to 2. If they're above 1, that's good. Below 1, that's bad. The first one we look at is the relative value, or RV, which is looking at the long-term potential over the next 1 to 3 years. This one, 1.5, tells us pretty good long-term potential over the next 1 to 3 years. The next one is the safety, or how much risk is involved with the stock, shown in the RS. Above 1 tells us less risk associated with it here. Then we get into the more technical indicator, the RT, or the relative timing, looking at the short-term price trend. 1.9, really strong short-term uptrend. So this stock has great long-term potential, less risk associated with it, and it's in a really strong short-term uptrend. So yeah, of course, overall, the stock is definitely favorable right now. Moving on to the next, AEHR. Break down the analysis. Good long-term potential, less risk associated with it, really strong short-term uptrend. So overall, stock is definitely favorable. Now, if you're, everybody is a little bit different. So if you have, certain things that you like to favor more so than, others, make sure you're also applying that as well. That way you can add your own personal style into this, such as we've talked about in the past. Undervalued, overvalued. Scrolling down, taking a look. stock is overvalued. Yeah, it has good fundamentals, but this really strong short-term uptrend has made it a little pricey right now. So therefore, if you're somebody who likes getting stocks at a bargain, you probably pass on this one. If you're somebody who's more focused on momentum, yeah, you may continue to hold this one or take advantage of it while that momentum lasts. So make sure, if there's certain things that you look for in stocks, that you're checking that as well. But also, you want to see all 4 indicators above that level of 1 to really indicate that the stock is more of a prudent stock here. Awesome. There we go. Finally starting to see more activity going on the Facebook page. If you guys are enjoying yourselves and you're on the Facebook page, make sure to hit that like button. Share this out with all your friends and family. Let's continue to grow that community there. Let's get everybody a little bit more active on there. All right. Decker Outdoors. Great long-term potential, less risk associated with it, really strong short-term uptrend. So yeah, of course, overall the stock is favorable. But let's say you want undervalued. Well, here's one that's undervalued for you as well. So this is how you can go to find stocks that you're comfortable with adding into your portfolio to replace some of those poor performers, to get your portfolio back on the right track and replacing the bad stocks with some good stocks that'll make you money here. Once you have those in place, as always, follow your trading plan, follow your stop criteria, your money management rules like we've talked about in the past. And then from that point, you've got pretty much a full-on trading system developed for yourself to help you, 1, reduce the time it takes to manage your portfolio, 2, remove your emotions out of your investing, and 3, free up your time so that way you can spend more time, being with family or doing some house projects or whatever it may be that you enjoy. Free up that time so you can have more time to spend with loved ones or doing things that you enjoy more than sitting at a computer all day long. All right. So with that, if you guys have any questions, feel free to let me know. I'd be glad to help you out. Be glad to answer any questions. If you're watching this on a replay, you can always give our support a call and they'd be glad to answer any questions that you have come up if we're not live right now. And if you guys don't have any questions, let's go ahead and start throwing out some symbols. What stocks do you guys want to see analyzed? Let me know in the comments. Let me know in the chat. And also, if you haven't already, make sure smash that like button. Subscribe to the channel if you're not already subscribed. Like the page if you're not already a follower of the page. Turn on notifications, all of that. What's the phone number for support? It is 888-658-7638. All right, starting to get some symbols coming in. APPH, App Harvest. This is a speculative play, and let's see why. Starting off at the 4 indicators at the bottom, the stock has poor long-term potential. It has a lot of risk associated with it, so really weak fundamentals currently. But the short-term trend is up with a RT of 1.3. So if you're a speculative trader, somebody looking to time it, looking to play the momentum, yeah, this is definitely an opportunity for you. But if you're somebody who values fundamentals even in the slightest, you're probably going to be staying away from it because that short-term uptrend is not enough to make the stock favorable overall. Or another way of thinking about it, that short-term uptrend is not enough to offset the amount of risk and the amount of uncertainty with this stock currently. But yeah, there's definitely money to be made. I know a few people who have made money with it. So TSLA, Tesla, great long-term potential, less risk associated with it. But even after the earnings beat, the timing is still well below that level of 1. Overall, it's a good stock, but right now, even with this, is not the time to be holding it in your portfolio. Wait a little bit, wait for that short-term trend to tick back to up before adding it into your portfolio. Because right now, even with the upturn, it still remains in a short-term decline. Netflix and FLX. Netflix, poor long-term potential, but does have a pretty consistent balance sheet, so less risk associated with it. The timing is starting to come back. 1.47 tells us it's in a really strong short-term uptrend. So overall, the stock is favorable here. WBX. WBX, poor long-term potential, a lot of risk associated with it. You do have a short-term uptrend, but not enough to offset the amount of risk involved with it. So therefore, right now the stock is unfavorable. BBAR. Good long-term potential, but does have some risk to get to that potential. Timing at 1.84 tells us it's in a really strong short-term uptrend. So overall, the stock is favorable. TSLQ. With an ETF, contra ETF on Tesla, the only thing you have to focus on is RT, because ETFs don't report quarterly earnings. They don't have balance sheets that you have to analyze and break down. So therefore, all you have to worry about with any ETF inside of VectorVest is the RT. At 0.62, it tells us it is in a steady decline, so therefore it's not favorable right now. NVIDIA, NVDA. NVIDIA, poor long-term potential, but less risk associated with it. Strong balance sheet, really decent, strong short-term uptrend, so therefore the stock is favorable. MLCO, poor long-term potential, a lot of risk associated with it, but you do have a really strong short-term uptrend. So therefore, right now it is favorable. That strength behind the momentum, is willing to offset the amount of risk involved. So therefore, definitely favorable right now. GIII Apparel, good long-term potential, but does have a lot of risk associated with it. The timing is basically flat. The stock is average at best. Personally, I'd like to see that timing be above that level of 1.1. At 1.01, you're basically just treading water, so therefore not really favorable at the moment. KOLD. Another ETF, so therefore your primary focus is RT at 1.7. Really strong short-term uptrend, so therefore the ETF is favorable right now. SHOP, SHOP. SHOP, poor long-term potential, a lot of risk associated with it. You do have a strong short-term uptrend, making the stock favorable right now. If you're a speculative investor, yeah, you may take advantage of this one. GD or GGDX. Not seeing that one there. J. Cat. Good long-term potential. A little bit less risk than the average stock out there. Really nice short-term strong uptrend. So overall, yeah, the stock is favorable currently. STLD. Good long-term potential, less risk associated with it. Nice steady short-term uptrend. Overall, definitely favorable still. KWeb. There we go. Another ETF, so therefore your primary focus is RT. At 1.86, really strong short-term uptrend, so therefore this ETF is currently favorable. Calm. We'll do two more after this one. So Calm, great long-term potential. About average risk involved in this stock compared to the average stock out there, but you are in a steady decline currently. Stock is a good stock, but right now is not the time to be holding it in your portfolio here. MULN, poor long-term potential, a lot of risk associated with it. Timing at 1.03, a slight uptrend, but not enough to make it favorable. Therefore, the stock is unfavorable currently. And then GDDY, great long-term potential, but does have more risk associated with it. You are in a steady short-term uptrend, so therefore the stock is favorable right now. At what point does RT show over 1 during a stock's current uptrend? So let's go take a look. Zoom into this one. Stock's RT crossed above 1 roughly here on the 12th roughly of January. Stock was moving sideways here for some time and then finally crossed above 1. When it crossed above 1, it was trading. It closed at 75.50, let's call it. Now it's trading 81, so $6 prior. All right, so with that, let's go ahead, jump back to the home page. Right now, the Dow is now turned into the red, down about 0.1%. NASDAQ's up about 0.5%, so giving back a lot of those gains. S&P 500 also giving back a lot of those gains, now only up about 0.15%. VectorVest Composite basically flat. We've gone from 3 green lights now to 3 yellow lights, so therefore the color guard is neutral, and VectorVest advocates caution when buying stocks at this time. This is why we always recommend taking a look at the advanced declines. We weren't seeing a 2-to-1 bias at the beginning of our session, and that told us we may want to hold off, may be cautious right now. We're not really seeing a lot of strength in either favor, so therefore probably best to sit on our hands. Glad we did, because now we're seeing the markets pulling back. Therefore, we need to be careful right now, especially with what we talked about last week with the MTI well in overbought territory. We need to be extremely cautious with our long positions and be realistic with our potential targets that we have set for our long positions as well. So with that, that's going to do it for me. Thank you all for tuning in. I hope you have enjoyed yourselves. If you have, make sure as always, smash that like button, subscribe to the pages if you're not already subscribed, and tell all your friends and family. Let's continue to grow these awesome communities that we have here and make them stronger than ever going throughout 2023. So on that, once again, thank you all for tuning in. I hope you all have a great rest of your trading day. Take care, be safe out there, and until next time, toodles.